Hey there, YouTube family. This is the Stocks with Josh show. Say hi in the comment section and hit the like for me. A lot of you shared with me that you did jump in on the Google options play yesterday, and a lot of you made money. It differed 10, 20, 30, 40, 50, 60%, but you made some money. And then at the end of yesterday's video, I told you guys that Meta was just looking ripe to be picked, that it had fallen too much, and there was a clear and obvious opportunity for at least a dead cat bounce, and that's what we saw today. So we're again playing it cautiously, conservatively, taking the profits when we can. Meta has turned out to be another successful trade for us to put into the books. Let me know, guys, if you got in on the Meta and how much money you made. I love hearing that feedback. Now, if we were in a less risk-on environment, I probably would be holding more of these earnings plays through to the earnings. I think that Meta could give us a nice pop tomorrow, but I am selling mine. I'm locking in the profits that I get every day. It's just making me happier and giving me more peaceful nights of sleep to know that I'm not on the hook, that if something unexpected happens, it's not going to cost me any money. I'm locking in my gains. That is my current recommendation. That's what I'm doing and going to continue to do. One of the reasons, I've shared this with you guys many times before, Wall Street always offers a money-making opportunity. And you know what? You can pull your money out every day at the end of the day. And guess what? Tomorrow will be a new opportunity. What it takes from you, though, is doing your due diligence, your research, learning your tools, learning your charts so that you can act quickly. I know that that's a hard thing. It's done over time. It's not all done in one day, but the journey is worth it. I've been having a blast this last couple of weeks because even though we are not in a bullish market, there's been so much money-making opportunity that's been availing itself. I'm going to go through some of my plays with you guys today so that hopefully you can learn and you can get an idea of how you might be making money, what you could transition some of your trades to. As you guys can see, the markets are mostly green. There are a lot of gray stocks in there today. Gray means neutral. They're not moving up or down. They're just sort of in a holding pattern. But crypto is up and Ethereum has taken off very nicely. We were up almost 10% at one point. And you guys know that I talked about it a week ago. I talked with you guys about the compression that crypto was in and that we were going to be very close to a breakout move. That very night, crypto dropped and one of you made a comment, and I get so much positive feedback from everybody in the comment section. To that, I say I love you guys. Occasionally, I get some comments that are a little bit smart. Someone said, yeah, Ethereum's compressing and it broke out to the downside. It did. My stop loss kicked me out. And then what did I have to do? I had conviction about Ethereum at this level. I got back in and today was a massive payday. I'm up hundreds of dollars on each of my shares. And I told you guys, I took a large position. These are winnings. And I also am holding it. I am still imagining that Ethereum could get up to my $1,600 target. I'm going to begin to raise my stop loss. That's what this is all about. You've got to take a position of risk. You will get stopped out over and over and over again. Put your stop loss back in. You catch it to the upside. Now I'm in a very safe position. I can raise my stop loss and guarantee myself a profit. And now I can just keep raising it as it moves up higher and higher. I might have caught the best position that could be gotten for a long time. I'm in with a large position. I'm in the profit. I have nothing to lose right now. But you know what? Was it stressful when we were vacillating in that very tight range around 1280 to 1320? Yes, it was. But I stayed on it, and now I'm in a great position. We had some movement off of SBET, SBET. We had a nice pop up to 70 cents midday. Now, that put us outside a descending channel that we've been locked in, just slowly moving our way down in the price. We got into the outside of it. But before we can get too happy, we have to get a confirmation with a second green day candle to the upside. But here's the main thing that I want you guys to take away from SBET as well as VERP. But specifically, I'm going to focus on SBET today because it gave us a move. If you go back and take a long view of SBET, we see that it has more than once moved up 100 or 200% in a single month. There's another time when it moved up 300% in a 3-month window, and again when it moved up 900% in a 3-month window. So why am I bringing this to your guys' attention? There are 2 ways to protect yourself with small cap stocks, and there's one reason to even invest in them to begin with, because you're not going to buy Apple stock, put all your money in it, and you're not going to see a 900% return in 3 months. It's just never going to happen. And so there's the option of putting smaller amounts of capital at risk in a small cap stock simply because the potential exists for it to really blow up. Now, we didn't buy this at $6, $7, $5. There's a lot of people that bought SBET at that range and suffered the loss when it came all the way down below $1. We're the buyers below $1, right? And so we've suffered some loss because if it's at $1 and it drops to 65 cents, that's a big loss if you got thousands of dollars into it. But we're down beneath $1, and what the opportunity ahead of us is the 100, 200, 300, or 900% opportunity. That's what we're looking at. But there's 2 ways of protecting yourself when you play a small cap stock. One, you can put a stop loss, and every time it kicks you out, you could choose to get back in. Kicks you out again, you choose to get back in at a little bit of a lower price. You need to have some fundamental view of the charts to know where you might buy in repeatedly. Or the other way, which I've chosen to use, is by limiting my overall size. SBET is not my largest size. 4 of my last trades, the profit from the trades were bigger than my total investment in SBET or VERB. So you need to keep that in perspective. I'm not saying that to say, oh, how big my investments are. I'm saying it so that you guys can understand. If you have thousands of dollars in a good blue chip stock, then you need to put just hundreds of dollars into a small cap stock with a higher risk. I've made this trade conservative for myself by limiting my size, but I want to try to encourage you guys why we got into it to begin with. One, because of the opportunity. Very little else that you can invest in with small amounts of money that can double, triple, or quadruple your account size. But we're talking about putting in $100 and trying to get that to 400, not putting in 10,000. If you've got thousands of dollars to invest, you need to be investing in more than penny stocks or small cap stocks or meme coins. You just need to. Otherwise, you're really not going to find this success. And if you're following me, trying to find success in those type of trades like the penny stocks and the meme coins, that's not my focus. I do trade those. I do put that risk in my portfolio, and I've had great wins. I'm pleased with the SBET and VERB as companies. There's reasons why I like them, both from a fundamental view, but they're small portions of my investment, and they should be small portions of yours. So here's why I'm going through this, and here's what I see happening in the coming days. SBET is very likely to go back up and test the $1 mark. So what that had previously been support, now it's going to be resistance. You might need to reduce your position size when it comes up. But the other ditch on the other side of the road, because you've got a road and you've got a ditch on both sides. One ditch on one side is that your position size is too big and you're not using a stop loss. The ditch on the other side is that it begins to move up and you get out of it too early because you were fearful and you're just grateful that you got back some of the money that you had lost and all that, processing all that fear. It goes back up to $1, you get out of the whole thing, and then it moves up 200 or 300%. The best plan of attack is the one that I've presented, which is make a minimal trade, 300, 400, 500. I would say in general, nothing above $1,000 on a small cap stock. You can have 1 or 2 of them in there because they could explode. They could become $2,000, $3,000, $4,000. You just can't have all your money into them. All right, let's talk about the Qs, the TQQQ and the SQQQ. This is actually a higher risk ETF. This is not considered a low risk value play. Playing these Qs are considered higher risk because they're 3x leverage ETFs. But it might be beneficial for some of you to begin to trade the trend of the market or to learn how to trade the trend of the market by playing these, because it gives you a little bit of profitability in that it's 3 times the move of the QQQ, which is what it's based off of. and it allows you to begin to look more broadly at the market, which in turn will allow you to trade individual stocks better. That's what my goal was to introducing that on this channel, would be that some of you would begin to develop the skill of simply understanding the direction and trend of the market by trading these. I gave you guys the call of the TQQQ last. That was the last call I gave you. And as of today, I'm sitting up 40% approximately from the buy-in price that I gave you. I know that a lot of you guys would consider a 40% upswing on all of your trade accounts in just the last month a huge win. So I'm not telling you to sell all your stock and buy the Qs, but you may consider beginning to focus on these and learn these and maybe take a small position when I throw out that I'm buying or selling. But of course, it's not financial advice. It's for educational purposes. I'm not telling you guys what to buy, sell, or hold. I want to shout out another one of my plays. I don't talk about it very much. It's in my value stock portfolio, and that's PERI. PERI, Perion Network. Today, I'm also up around 40% from the time that I shouted it out as a buy some months back. That has continued to be a winner, and what was specifically ideal about it was the strategic entry price that we got. And that's where the benefit of charting can really help you, is to understand when something is pulled back enough and maybe safe enough to buy. And that one is continuing to pay off as it's continuing to move higher. I've made this point before. If you're not making money, first of all, I care. It really bums me out to hear from some of you guys that are just facing loss after loss, because I don't want you to walk away, because I think there's so much opportunity in the stock market. It is simply an issue of learning. I want you guys to prosper, and I can absolutely tell you there is no black cloud over you. The difference between making money and losing money is purely knowledge. Knowledge of the stocks, knowledge of the markets, knowledge of Wall Street, knowledge of the trading tools that you guys are using. I introduced MooMoo specifically because of the tools and the opportunity that I saw in it for retail investors. Real quick, the opportunity there, if you don't have MooMoo, is they'll give you 15 stocks right now if you deposit and fund your account with a potential value of $30,000. If you put in just $1, you're guaranteed a free stock and $10. But if you put in $100, you're guaranteed 6 chances at stocks valued at $2,000 each. In addition to that, you can join the Stocks with Josh community, which is becoming one of the largest communities on MooMoo. You can learn from me, but you can also learn from the guys that are in there answering questions for me. MooMoo's got the max 16 trade hour window, as well as the 8 different order types that swing traders and day traders need to lock in profits and to protect themselves from loss. For instance, you have free level 2 data. I do not make a single trade without analyzing the level 2 data. It's basically showing you all the people that are in line to either buy or sell the stock. And obviously, if the sellers significantly outweigh the buyers, then it means that it's likely the price is going to go down. It's a really simple way for me to go, hey, Josh, hold off on this. Wait a half an hour. Some of you guys made less money on the Google Play and the Meta Play because you only knew to buy it in the morning because I recommended it. You didn't have a way of gauging the exact time to buy. I gauged my exact time to buy on level 2 data, which was I was sitting there looking at on my phone, watching the MooMoo level 2 data. As it came down, as the sellers were outweighing the buyers, I didn't buy. But eventually there came a point when the buyers began to get the right amount of momentum, and I said, you know what? I'm going to go in now. That's what worked for me. And the difference there can be from making a 20% profit to a 60 or 100% profit. That's the type of knowledge that you need to get dialed in. And on the bigger point of profits, I'm going to continue to talk about Norwegian Cruise Line Holdings because it's been an extremely profitable trade. And you guys have also been with me on that journey as well. A lot of you guys have been showing me the posts of the profits you're making, but I want to begin to warn you, we're coming up against a level of resistance. We need to be more cautious and have a tighter stop loss if we're going long, because it's likely that we could see a pullback. It's frothy at this level, so we need to be very mindful of that. So tighten up your stop losses on Norwegian Cruise Lines. The target right now is still $17. I want to remind everybody why I got into Norwegian Cruise Lines. I specifically like the leadership of that company. That is the fundamental story. But the price action story also showed me that it had been beaten down enough and it stair-stepped down. It was back to its 2020 COVID levels, and there just seemed a lot of opportunity for them moving forward to increase their sales and have great earnings. There's a lot of people that don't understand that stocks go up when the narrative points to a long period of time in which the earnings, one after the other, can be better than the one before. There's a lot of companies, big companies like Apple and Tesla, who are fabulous blue chip companies, but the reason those could come down and a company like Norwegian Cruise Lines could go up is the question of earnings. Is Norwegian Cruise Lines going to be able to present better earnings than they've been able to show since 2020? And the answer is very likely they will. And I'm not necessarily bearish on Apple and Tesla. I do have some views as to where the stock price might come down to. But the question is, are they going to have significantly better earnings every single quarter for the next year? Most people don't believe that that is true. Thus, the stock price can fall further down. Okay, final thoughts. We are still in a risk-on environment. If you've got gains, be mindful of what I'm advocating. Take profits every day. And if you say, well, Josh, this could blow up even further tomorrow, fine, buy it again in the morning. There's going to be the fluctuation. That's where the VIX comes in. The VIX means that there's going to be massive price fluctuation every day. So you could sell today and the same thing could drop tomorrow morning. You can get back into it and it could take off from there. So consider keeping a closer rein on your money. Hey, don't miss out on the plays that are being made on this channel. You know what to do. Hit the subscribe and the notification bell. Peace and blessings, my friends. Take care.